the main reason that gold is being accumulated is because central banks have lost confidence in the dollar and in the fiscal responsibility of the U.S. government or the credibility of the Federal Reserve. So you're seeing it first in gold. I think you'll next see it in the dollar. And then I think you'll see it after that in the Treasury market, where you'll start to see a big drop in bond prices and a rise in long-term yields, despite the fact that the Fed is going to be reducing short-term rates. But I think gold is just indicating that a much bigger crisis is coming. Gold is the first shoe to drop. Gold soaring like this is telling you that the dollar is going to go down, that bonds are going to go down. If you wait for that, if you wait for the move in gold to also be reflected in a big down move in the dollar and a down move in the bond market, well, you're too late. You're too late to diffuse the crisis, but you're also too late to prepare for it financially. Well, I'm more concerned about a U.S. dollar and sovereign debt crisis, because I think that's going to be the consequence of the Fed bailing out all these banks and preventing that. The Fed does these stress tests every year, and I always point out that the stress tests are all BS, because they don't stress test for stagflation. They don't have any scenario in which they test how a bank would perform with stagflation. So if we had a recession with rising inflation and rising interest rates, they don't test any banks for that. And I think that's because they know they would all fail. And so they don't even want to run a test if they already know that no one's going to pass. But that is the environment that we're in, and it's going to get a lot worse. And I think the only way that we're not going to see widespread failure in the banking system is if we have massive money printing. And so that's going to ultimately cause a dollar and sovereign debt crisis. And again, that is what gold is telling you. Gold is the monetary canary in the coal mine. Gold is shooting up now for a reason. To me, it's very much like the collapse of subprime in 2007, because I had been forecasting subprime to collapse for years before it did. But I forecast that as part of a broader banking crisis, financial crisis, that I knew would follow the collapse of the subprime market, which would ultimately take down the mortgage market and the banking system and Freddie and Fannie. And I've been talking about that and warning about that. I wrote about it. But when the subprime market blew up in 2007, the mainstream dismissed it as an isolated event. Even the Federal Reserve said, don't worry, it's contained. And I was out there saying, no, it's not. It's the tip of this huge iceberg. Just wait. And of course, we had the crisis the following year in 2008. Well, to me, I've been warning about a big move up in the price of gold as foreshadowing a dollar crisis and a sovereign debt crisis. And now it's happening. And just like the mainstream dismissed the warning from subprime, they're dismissing the warning from gold. But I think gold is just indicating that a much bigger crisis is coming. And I've even heard people say that we don't have to worry about the price of gold because the dollar's not falling, because the bond market isn't falling. And so therefore, gold's rise is not reflective of a loss of confidence in the dollar or the bond market. And my response to that is just wait. Gold is the first shoe to drop. Gold soaring like this is telling you that the dollar is going to go down, that bonds are going to go down. If you wait for that, if you wait for the move in gold to also be reflected in a big down move in the dollar and a down move in the bond market, well, you're too late. You're too late to diffuse the crisis, but you're also too late to prepare for it financially. That's why I keep, reiterating with my clients, look, you got to buy gold, you got to buy silver, hey, you got to dip now to 4,100 or, I think 4,000 is really the new 3,000 for gold. So 4,000 is kind of the support. Doesn't mean we can't go below it, but I think any dip below 4,000 will be short-lived. Silver got up to 54 and change, so it took out the 50 double top. We're back below 50 now. I mean, silver is a lot more volatile. You don't have the central bank buying to stabilize it like you do in gold. But look, I think silver has clearly broken out. It's proven that 50 isn't a ceiling anymore. Soon it's going to be the floor. People should be buying silver. I think it's very cheap, and people should be getting out of U.S. assets. I think the U.S. stock market, which has been really in a massive bear market for 25 years, I think that bear market's going to accelerate. But finally, after many, many years, foreign markets are smoking U.S. markets. I think the S&P is up maybe 13, 14% this year. I've got a foreign dividend payer fund that's up almost 50% this year. This isn't my gold fund. This is just my defensive dividend paying stock fund. But so foreign markets are finally way outperforming the U.S. And I think that trend is going to continue. It's not just central bankers who are getting out of dollars into gold. It's foreign investors who are going to be getting out of U.S. investments and reinvesting domestically. That's going to be followed by Americans diversifying internationally. Gold is rising as a reflection of a loss of confidence in the dollar, because I think the main reason that gold is being accumulated is because central banks have lost confidence in the dollar and in the fiscal responsibility of the U.S. government or the credibility of the Federal Reserve. So you're seeing it first in gold. I think you'll next see it in the dollar, and then I think you'll see it after that in the Treasury market, where you'll start to see a big drop in bond prices and a rise in long-term yields, despite the fact that the Fed is going to be reducing short-term rates. And I think that is going to be the catalyst for a return to quantitative easing, because I think the Fed is going to try to lower long-term interest rates through its open market operations, where it needs to print money to buy the bonds that the rest of the world is selling. And so that, I think, will be another catalyst to drive gold to even higher levels, because that's just massive inflation. And, the last couple of times we tried QE, inflation, at least the way the government purports to measure it, was below 2%. So the government was able to justify QE by saying, look, inflation is below target. And so we could do this because the goal is to get inflation higher to reach our target. And so, we're going to accomplish that with QE. But if inflation is already well above 2%, what is the excuse for creating more inflation? How do you justify QE when inflation is 4 or 5%? That's the way simple, the government Peter measures it. So, what does that do to the present value of gold if inflation is going to be 50% higher from now until the end of time? But of course, they're not going to achieve 3, because if they give up 2 and they move to 3, well, then they're going to give up 3. They've already proven that their target is BS when they're above it. They don't have the monetary cojones to do what it takes to bring inflation down to 2%. Well, then why would they have it to bring it down to 3% or 4%? So I think, once they move it, they're done, which is why they probably won't. I don't know that they're officially ever going to say that they have a target of 3. I think they're going to keep a target of 2, but they're just never going to hit it. And I thought it was really ridiculous in the last FOMC meeting. Somebody actually asked Powell about his forecast, because he pointed out, hey, 2 years ago, you predicted that in 2 years, inflation would be 2%. And now it's 2 years later and it's way above 2%. And you're still predicting that 2% will have 2% inflation in 2 years. And he said, why should we believe you? What makes you more confident now than you were 2 years ago when you made the same prediction? And Powell basically said, look, we don't really know where inflation is going to be in 2 years. It's just that 2% is our target. So that's our forecast. We just assume that we're going to hit our target, but we have no idea. So in other words, they just make it up. The only reason they forecast 2% is because they want it to be 2%, not because they think it's going to be 2% or they have any reason to believe that it's going to be 2%. So they could just keep on talking 2% inflation, just to pretend that they've got that target. But, we're not going to go anywhere near it. What they may do to try to get closer to 2% is not change the target, but change the CPI. That's how the government operates, right? You change the methodology for calculating the CPI so that you get a lower number. That's what they did with the Boskin Commission. That's why the whole CPI is irrelevant today, because it's been rigged by the government to have a low number. China is buying to have gold as a reserve to replace the dollar. And I think that's what a lot of other central banks are doing. They're buying gold to restore gold as, the monetary backing of their currency. And this, I think, is a major, transformation in the global monetary system. I think it's on the order of, or maybe bigger than what happened in the 1970s when we went off the gold standard. And so the world went from having the US dollar backed by gold as the reserve to just having a fiat currency as the reserve. That was a significant shift in the monetary order. But now it's not the U.S. going off the gold standard. It's the world going off the dollar standard and returning to the gold standard. And I think that's probably even more significant, certainly for the United States, because we're about to have the rug pulled out from under us. And, we've been living off of the dollar's reserve status. We've used it as a crutch to live beyond our means. We've enjoyed lower consumer prices and lower interest rates and higher asset prices as a result of this privilege that I think we are in the process of losing. So when you point to these other moves up in gold and silver, I think they were largely driven at the peaks by speculators, by retail investors who were, jumping on the bandwagon and pushing the markets to, kind of extreme points, and then they would go down. I don't think we've even seen that yet. I think that retail investors have barely participated. In fact, if you look back at the